inflation in focus. After slowing inflation in Europe and mixed economic data from the United States, US inflation will be the key market driver in the week ahead. However, the United Kingdom will also have a busy week with much data to watch. But in other parts of the world, we will have a quiet week. Let's review the most important events and data in the week ahead with me, Ahura, and equity markets. Number 1, Japanese data. Household spending and Tokyo inflation numbers will be out on Tuesday, and we are waiting to see with increasing inflation Japanese spending less. While Tokyo's inflation is expected to rise by 3.8% annually in November, the inflation-adjusted value of all consumer expenditures is supposed to fall by 0.5%. Expected increasing inflation means the Japanese central bank can consider some changes in its ultra-easy policies while the government is trying to raise the wages to deal with rising prices. Japanese yen should get supported with these estimated data. Number 4, Australian inflation and retail sales. Like most developed economies except Japan and China, Q4 inflation is expected to slow down. Australian inflation for Q4 was estimated at 7%, down from 7.3%, to help the consumers to buy more and rise retail sales by 0.7% in November, while the month before it was falling by minus 0.2%. The Australian stock market should get supported by these data, the same as the Australian dollar. Number 3, China inflation. The busiest day of the week starts with Chinese inflation. Both consumers and producer inflation numbers are expected to rise in December compared with November. However, 1.8% CPI and 0.1% PPI are way less than other economies, which can help the government to issue a stimulus package worth more than $143 billion to support its semiconductor industry, which would be one of the biggest ever fiscal incentive packages, and not worry about the inflation. Chinese stock markets can have a good days in the coming months. Number 4, US inflation. After mixed employment data, now investors are looking at CPI numbers to find out what they should expect from the FOMC meeting at the end of January. With gasoline prices falling almost 12.7% and economic growth slowing in recent months, it's expected to see the 2022 inflation ends at 6.5% in the last month, which would be a 14-month low. Core inflation is also likely to fall to 5.7% annually, but on monthly scale it can rise by 0.3%, 0.1% more than November inflation. Expected data support the less hawkish Fed, increase the stock markets, but pressure the US dollar. Number 5, UK data. This Friday is a British day with GDP, trade data, and industrial and manufacturing production numbers on calendar. For November, industrial and manufacturing productions are expected to contract further at minus 0.3% and minus 0.2% respectively. After unexpected minus 0.3% contraction in Q3, expectations for the last quarter cannot be promising in connection with GDP. The only optimal number can be the trade balance. Of course, in this case, a better trade balance is primarily because of fewer imports, which means the domestic economy is struggling. Expected data would not be in favor of the UK stock markets. Finally, number 6, US consumer sentiment. While the labor market is totally recovered and now even thought is much better than pre-pandemic, inflation is starting to slow down and income increase, consumer sentiment remains well below pre-pandemic levels according to the University of Michigan survey. Consumer expectations for the year ahead fell to the lowest annual rate in the last 18 months, but still, if inflation continues to cool further, consumer sentiment also can increase. For January, consensus expectations for the consumer sentiment to rise to 60.5. Better sentiment will be in favor of stock markets and vice versa. Thanks for watching this video. I hope it's going to be an amazing week for all of you guys.